Firstly, thanks Vineet for having us over and having me on the platform. CIOspeak is a wonderful platform. I think it's going to be really helpful for IT professionals in the region. And I've been going through some of the content over the last few days, and I've thoroughly enjoyed going through them. So really appreciate having me over on the platform. I believe that we are in what we call Payments 4.0. And Payments 4.0 is the fourth version of transformation that we're seeing in the payment space. The first one is obviously moving from cash to plastic. So we used ATMs, we then started using those plastics at merchants. And then we went on to the third phase, which was primarily driven by contactless payments, driven by contactless technologies, and of course, digital wallets that came out in the market. What we're going to see now is Payments 4.x. And 4.x is where payments are going to be completely transparent, invisible, and seamless to the customer, where all this is going to happen in the background. The customer is just going to complete the transaction of purchasing goods, purchasing services, and walk away. We're already seeing that globally transform many industries. We've seen videos of people walking into grocery stores and walking out without actually having to use a payment instrument. And I think that's really what Payment 4.0 is going to be. It's going to be embedded, it's going to be transparent, and it's going to be seamless and frictionless as far as the customer experience is concerned. I think we are on a very clear path towards achieving that. And the reason that I think it's going to be sooner than later, because this change is not driven by the conventional banking and financial services players, but this change is enabled by big tech and fintech, who are agile, fast, nimble, and can get out these changes really, really fast. So, of course, if you'd asked me this question 10 years back, it would probably take a conventional player a few years to get to that point. But with big tech like Apple, Google, Facebook, etc. coming into the space, and of course complemented by fintechs who are also taking on large gaps that exist in the ecosystem today, this change is more sooner than later, in my opinion. The thing about payments is that to digitize payments, you need to be looking at the entire IT landscape. So you need to start at the experiences that you're delivering to the end customer. These could be something like your mobile apps, which by the way are today moving into super apps, which give you multiple services and products from the same application. You then have the very important part of digitizing payments, which is around KYC, identity, and fraud protection. This is another area that needs to be looked at from a digitization perspective. You then go to the back-end processors. And in back-end processors, I think that's where the cloud is coming in, because it's allowing you to scale the back-end processor based on volumes that you're seeing. And last but not the least, the rails that you're using to execute your payments. So when you're looking at a digital transformation on the payment side, you need to look at each and every one of these components, and leaving out any one component is going to disrupt or cause friction in the journey that you're going to deliver to your end customer. Well, on the contrary, I believe that this industry has a long way to go to achieve true digitization. Even today, accessing financial services or payments is very much a paper-driven or a branch-driven process for a very large cross-section of the society. And if you want to really digitize payments, then it needs to really be at the grassroots, and the majority of the population should have access to those digital services. And that's why I believe that we still are not there. There are huge gaps in the ecosystem and the experiences that you can deliver to the end customer when it comes to digital payments. And I think that's where the opportunity is. There is an opportunity here for a fintech to come and disrupt the space, and we hope to play a part in filling that opportunity as a fintech and a scheme in the UAE. Well, Vineet, my opinion is that you probably wouldn't even have to use your fingerprint very soon to initiate a payment. Payments, like I said, are going to get embedded, they're going to become transparent or invisible, and they're going to be completely seamless and frictionless for the customer. So you'd pretty much be walking into your favorite outlet, picking up a product, walking out, and the payment is really happening in the background. So that's where I think payments is going in the market. We're going to soon see some of those innovations come up in the region and the country as well. And like I said, maybe fingerprint itself will be a thing of the past very soon. There is an estimate that the industry is set to lose $400 billion in the next 10 years around fraud on digital payments. Now, post-pandemic, the demand for instant payments and e-commerce payments have grown exponentially. What that also means is that there are more chances and that fraudsters are coming up with newer techniques and strategies to be able to commit fraud and payment fraud that is there. It has become more challenging because the behavior of spend of customers pre-pandemic and post-pandemic are completely different. Post-pandemic, we are seeing a lot of unplanned, impulsive buying that is happening on e-commerce, which causes even AI and ML systems to not be able to predict fraud that is there. So my solution and my thinking on this is that the only way out to prevent this is really robust identity and digital KYC capabilities, because that will give confidence both to the customer, the merchant, and the payment services provider that the transaction is actually a valid transaction and not a fraud-related transaction that is there. So it is top of mind for any CIO in this space. And like I said, some of the newer technologies around digital identities will most likely be the solution that will solve the problem. Very similar to the previous discussion we had on how do we prevent fraud and how do we enhance cybersecurity, technology has a very, very important role to play in compliance as well. With the volumes of payments that are being processed today and only expected to grow up exponentially, AI, ML-based compliance platforms will be the norm in pretty much every institution that is processing payments today. And hence, technology is the only way that we can actually ensure that compliances, both regulatorily as well as in global industry standards, are met and adhered to and regularly updated, because doing this manually or doing this using a rule-based engine is going to be a thing of the past. In fact, it already is a thing of the past today. If you want to use some of these technologies, the industry has to be on cloud, because doing this in an old style on-premise fashion is not going to give you the ability to leverage the power that the cloud brings to this industry. So the big challenge for this industry today is how do you adopt cloud and through cloud get the benefit of things like artificial intelligence, machine learning, or for that matter even blockchain or distributed ledger technologies, which brings in that much more transparency in payments that are happening globally. And more relevant in this market, because remittances is one of the biggest payment need in the market today because of the large expat population that is there. And for remittances to happen successfully, you need technology looking at compliance, onboarding, sanctions, AML, KYC, etc. So absolutely spot on, Vineet. Technology is going to be a very key contributor to ensuring that these payments that we are doing actually are making the world safer, right? And not the other way around. When I came on board, there were two priorities for the organization. One, we were in the middle of an acquisition, which means that there was a business that was already running and we had to keep it running so that our existing customers and members are not impacted by the transition. And on the other hand, the new ownership brought a new vision, a new strategy, which was much more agile, nimble, and disruptive in terms of the products that we wanted to take out to market. So the biggest challenge for me as a CIO was balancing the BAU or regular running of the business versus driving all the disruptions and the innovations that the business and the market was demanding. Safe to say that today, Mercury is a completely cloud-based architecture. We don't have a single hardware or a server that runs applications today, right? So either it's running with a partner or it's on cloud. Of course, all necessary measures required to secure the data, ensure that the data is still within the country as a local scheme have all been taken care of. And that move has actually enabled us to balance the production support and BAU as a norm, while also being able to bring out innovative and disruptive products into the market and the ecosystem that is there. I think we're a great case study for this because we just migrated our entire ERP platform to cloud in 15 days. So from start to finish, from contract signing to the first go live, we've completed the whole project in 15 days. And that comes with a lot of planning, understanding the risks, understanding processes that we are migrating. And of course, adopting the cloud means you're going to minimize the number of customizations that you're going to do, because then you're standardizing processes and using what industry standard platforms are providing to you to to standardized processes that are there. So that's how we've driven our cloud strategy. Like I said, we have a very clear goal that no physical servers, and where we can consume SaaS or PaaS-based platforms, that's the direction that we take, as long as data residency is within the country. We did something called a rapid cloud deployment, which is the methodology that we followed to deploy on cloud. And yes, I guess coming from an Oracle background helped as well, because we knew exactly what the platform is capable of and how we can migrate our existing business onto a new ERP platform. Well, Oracle is the wonderful company that it is, right? And they have fantastic products. I've been part of the journey for almost a decade with them, specifically managing banking and financial services business and customers as part of my previous role. And that experience really helps when coming and deploying those technologies in the space of payments, fintechs, etc. One of the things that I keep asking myself is, we've done a lot of large projects with Oracle, driving value for some of the largest banks and financial institutions of the world. But what we want to do with Mercury is bring that experience and take it to driving financial inclusion, right? Driving products and services with the typically unbanked and the underbanked. So that experience of actually having done it at scale is really an experience that I bring to Mercury. And because financial inclusion or driving strategies around creating locally relevant products is all about scale. And I think the Oracle experience really helped me bring that capability into Mercury as well. Interesting, and call it destiny, but my life story is probably shaped by a lot of pleasant but unplanned and accidental events that happened. My first technology job was when I was an aspiring cricketer, and I drove my colleague to an interview, and there was a slot available for an additional interview, and that's how I got my first job in technology as a developer. Quit it because I thought it's important that I broaden my horizon. So did an MBA with a prestigious B school in finance. Now, the ambition there was to go into finance, but I ended up accepting an offer from a large group of banks to drive their technology transformation. So I was back in technology. And from driving technology, like I said, if you ask my hiring manager, he probably hired me at Oracle, saying that, okay, probably let's see what you can do on the other side of the table. And last but not the least, like I said, the journey from a large big tech like Oracle to Mercury has been, how do we bring those technologies that we've seen so well deployed and driving value in these large organizations and thereby to their customers into the space of financial inclusion, where we can drive value in the customer segment that is typically underbanked or underserved in banking and financial services. So it has been, like I said, a series of events and unplanned accidents that probably has brought me to where I am today.